Hi guys, my name is Lisa. Welcome back to my channel and I'm really happy to see you here. So today we're gonna discuss a really interesting topic. You asked me a lot about this as well. It's risk management. What is that? How to use it and why is it really important in trading? But before we start guys, don't forget to subscribe to my Telegram channel. The link will be in the description of this video. Also, you can register on Pocket Option by my link and use my promo code START50 to get plus 50% to your first deposit. So it's a really good start for you in this big trading world. So guys, let's get started. First of all, I open my Pocket Option account and we will set up all the settings, and after that, and now I will start. So risk management is critical to becoming a successful trader, but regardless of the type of trading you choose. So you can achieve long-term success and protect your cash only if you know how to handle risk. So however, what is risk management in trading and why is it required? So that's why we'll discuss in this video with 5 risk management strategies for trading like a pro. So let's start. What is that? Right? So risk management is the systematic approach to discovering, assessing, and managing risks that are inherent to the stock markets. So, for example, you choose a bank stock and think of risk factors such as changing invest. By the way, guys, we had our profit, rates, default, liquidity, and more. I open here another trade. We change our amount of money. Let's just do it with $30, why not? And I open another trade because I'm not really sure in this trade, so that's why I decided to put this amount of money, but let's see. So let's keep talking. So what you may not have thought about is a shift in banking regulations or a black swan event such as COVID, for example, right? So thus, you could conclude that risk management is a collection of several tactics and strategies aimed at protecting your trading capital. So at the same time, it helps mitigate losses and maximize returns. So yeah, guys, let's see at our trade. It's 17 seconds till the end of a trade. So let's also talk about importance of risk management, because not so many people, beginners, I mean, like, they don't really know about this. They know about money management. I always talk about this, about catch-up system, but I don't really talk a lot about risk management. So guys, we didn't have profit, and let's do a catch-up here. Let's see what we can do. Let's see. So we can see here now that it started upward trends. So because it was a downward trend for a long time and now it's going up. So here I open a trade for $60. Let's see what we're gonna have because I'm not really sure that the chart will go up. So let's talk about importance of risk management, because I actually don't talk a lot about risk management. So first of all, it's capital preservation. So risk management is fundamentally all about preserving your trading capital. So with enough capital, you cannot participate in the market. So meaning you can profit from various opportunities. So preserving your capital guarantees that you have the resources to carry on trading. Second of all, emotional control. This is really important. Trading can be an immensely emotional activity, right? And feelings can impair judgment. So by lowering the anxiety and greed that often lead to rash judgments, effective risk management will enable you to maintain discipline and emotional control. So you can trade with greater confidence knowing your risks are controlled. Yeah, guys, by the way, we didn't win this trade, so let's open another one. It's okay. I think I will open a trade here for 1 minute up. So you can trade with greater confidence knowing your risks are controlled, all while ensuring that your future self has enough capital to trade with, right? And the next one is consistency. So successful traders are defined by their discipline and consistency. So effective risk management allows traders to stick to a steady and long-term trading strategy. So this leads to eliminating significant drawdowns, assuring your consistent and long-term gains. So guys, let's see at our trades. It's 17 seconds. I think it's going pretty well. And it's 3, 2, 1, and boom, we won this trade. Let's change our amount of money to $50. Let's see what we can have here and where we can open our trades. So guys, here I open a trade for 1 minute up, and we keep talking. So let's also talk about common risk management strategies in trading. So first of all, using a stop loss order, you can fix predetermined price levels before which you are prepared to close a position to limit potential losses. So it works as a safeguard, keeping small losses from turning into major ones. So setting a following stop loss order is an essential risk management strategy for preserving capital, of course. But I think a lot of people know about this. This is really the basics. So second of all, master position sizing. So the importance of choosing the optimal position size for each trade cannot be underestimated. So the selection of a position size is completely based on your risk appetite and the size of your trading account. So guys, we didn't win this trade. Let's just do another one. So I open here another trade for 1 minute down. So you should definitely avoid using excessive leverage, as excessive position size might result in severe losses. So the next strategy is follow the 1% rule in trading. So the 1% rule in trading is a risk management principle that suggests a trader should not risk more than 1% of their total trading capital on any single trade. But I actually can recommend you to use 5% of your deposit as well if you have enough amount of money, because 1% is really small. For example, if you have like $10 on your account, you cannot trade with 1%, of course, because the minimum trade is only $1. So yeah, guys, we won this trade. Let's change our amount of money and let's open another trade. And we open a trade for 1 minute down. So yeah, but 1% is for those who have at least like $100, $200 on their account. But if you have less, you can use 3 to 5% of your deposit per one trade, but this is the maximum. So limiting your trading capital is by far one of the most potent ways to manage risk right off the bat. So it requires you to be disciplined because you have a defined starting point derived from which you can determine your profit goals as well. So the next strategy is diversification and asset allocation. So diversification is spreading your capital among several assets or asset types. So it is the oldest risk management principle you can come across. So guys, we didn't win this trade. So guys, let's do another trade. Let's see where we can open our trades. And here I open a trade for $100 down for 1 minute. So not putting all of your capital in the same asset reduces the possibility of substantial losses. So selecting what proportion of your capital to devote to each asset or group of assets is called asset allocation. So the next strategy is avoid emotional and revenge trading. So you made a loss, the trade went off and it put a dent in your trading capital. So while you will come across such situation when taking position, it's important to not get carried away by the emotions of the lose. So yeah, guys, we didn't win this trade. As you can see, I'm feeling very calmly always. Even when we lose, we can always do a catch up and just cover our losses and have our profits. So I changed the amount of money to $200 and we are waiting for a good entry point. And after that, I will open a trade. And I open a trade here for $200. So yeah, for example, you should not immediately go back to the same strategy or position with the hope of misguided belief that it will work out definitely. Instead, you should assess what went wrong, either in your strategy or market asset, wise to improve as a trader. So yeah, guys, we have our profit. That's great. And let's just change our amount of money and do another trade. So here I open a trade for 1 minute up. So guys, let's also talk about best risk management tools. So first of all is risk reward ratio. So a core concept is risk management is the risk reward ratio. So weighting the potential benefit against the risk involved in each trade is known as the risk reward ratio. So if your risk reward ratio is positive and favorable, your prospective gains will exceed your potential losses. You can access this using a risk reward calculator or a payoff guard. So the second tool is volatility analysis. So the extent to which the price of an asset swings is guided by its volatility. So if not managed properly, high volatility in the market can lead to frequent and bigger fluctuations in the price, leading to potentially heavier losses. So historical research and volatility analysis of the asset should be done when setting stop loss orders and position sizes. So, it's all of the steps is really important. And yeah guys, the risk management as well, you need to know it before you start trading. But if you trade by my signals, if you just follow my signals, you don't need to know it actually. You just need to follow my signals right after me, and you don't need to analyze all of these things. But if you want to be a solo trader, if you want to trade by yourself in your free time or something, or you just want to learn more about this, it's a really important topic that you need to know. So risk management is really useful and important because it's about recognizing, controlling, and utilizing the risk to your advantage. So, it's in your interest to know this. So guys, I hope you like this video. Don't forget to subscribe to my YouTube channel, put the likes here, and text in the comments what do you think about that, and do you already know about risk management or not. Also guys, don't forget to subscribe to my Telegram channel. There I share with you a lot of useful information about trading, feedback from my subscribers. Also, I do a free trading session every Wednesday in my main channel, so you can just join it absolutely for free. Everyone can do it. It's open for everyone, so I'm gonna wait you there, and you can just test my signals even on demo account if you want, just to understand how all this works. So I'm waiting for all of you in my Telegram channel, and see you on next trading session. Bye bye.